Welcome to this video on passing prop firm challenges using expert-advised strict drawdown limits, manage risk, and ensure rule compliance. First, let's look at the evaluation pillars. These operational boundaries are specifically designed to test your risk management skills over raw profitability. It is important to avoid prohibited mechanics. High-risk martingale and grid strategies, as well as latency arbitrage and HFT algorithms, are commonly banned. Using these can lead to denied payouts or immediate account closure. Next, consider your risk parameter tuning. Use a conservative risk per trade, ideally between 0.25% and 0.5%. Always use a hard stop loss to manage potential slippage and cap your concurrent positions to avoid correlated risk. For risk sizing, we recommend a 0.3% risk per trade. This creates a significant safety buffer, allowing for a series of losses without breaching your daily drawdown limits. Use the provided formula to calibrate your position size accurately. Implement automation guardrails to protect your account. Use a low-latency VPS to ensure fast execution, deploy an equity guard EA to automate loss limits, and use a news pause filter to avoid trading during high-impact economic events. This table compares standard retail settings with a safer configuration for prop firm challenges. By adjusting your risk per trade, daily cutoffs, and position limits, you can better align your strategy with strict firm rules. The challenge execution lifecycle consists of 4 phases: forward testing your EA, deploying with systematic risk, hitting your profit target, and finally, using microsizing to safely complete your required trading days. Be aware that slippage can kill accounts. During major economic releases, liquidity often dries up and spreads can inflate drastically. Even with a stop loss, news events can push your losses beyond your programmed limits. This chart illustrates drawdown survival probability. Statistical simulations confirm that lower trade risk significantly increases your chances of passing a challenge by mitigating the impact of peak drawdown clusters. Finally, focus on post-target microsizing. Once you hit your profit goal, lock it in by turning off primary signals. Switch to minimal lot sizes to meet your required trading days, avoid overtrading, and respect all consistency rules. You are now ready to deploy. Remember to treat your EA as an automated risk management tool rather than a passive money-making machine. Dominate the gold markets and pass your prop firm challenges on autopilot. See link in the description.